Hi, welcome to the Market Alert for Thursday the 9th of June 2016. First of all, backtrack to yesterday's Market Alert and an apology. I actually made a mistake in the analysis, and the reason for that is periodically I am subjected to migraine type of headaches, and I woke with one yesterday morning, so I wasn't looking at the chart as clearly as I normally would, and didn't see that the market had actually taken out this buy trade, which was brought to my attention, and thank you for that, Brian, before the sell signal came into place. And the audited figures also brought this to my attention as well when I received them back from the auditor to the oversight that I'd made. So apologies, it's very rare that actually happens. It wasn't intentional. Like I say, there were mitigating circumstances there. So future lesson, don't record when subjected to a dreadful type of migraine headache. Wait till it clears and there's a bit more clarity. Also, another question that I received was about this signal late on as well, so I'll deal with this as well, and that the market didn't go down and hit the scalp figure until the market had closed, and that's not strictly true. It was at 20:45 when the market did. And it's no problem had the market have closed during the official time anyway, because all that happens is the spread with ETX goes from 1 point to 3 points, but you can still trade, you can still get in and out of the trade, you just have to sacrifice a few points in order to do so. So again, if you wanted to hold this trade through the overnight session, you could do that, but you've got to be aware that the spread is 3 points, but then goes down to 1 point during the official session from 2:30 to 9 p.m. So yesterday's trades, I'm going to show you the live chart, because when I loaded the end of day one, you will see that when we show the comparison that I ended up with a buy signal when I reloaded this chart, but I didn't get this in real time. So let me just switch and show you this. So we see the market opening at 2:30, we get a buy signal, the market moves higher up to that 18,000 level. It's got to break that in order to move higher and also hit the scalp, which it does. We then see the JOLTS opening employment figures, which were released at 3 p.m. These came out at 5.79, forecast at 5.67 there. Certainly better than forecast, and then the market put in a sell signal, which is odd, but no more, because the markets don't work the way they used to. See the market back below the 18,000. This is a major resistance area, and we then see the market move lower, straight down 50 points before the market finds support, and then we get the crude oil figures, which were released, showing minus 3.2 million barrels, the same as was actually forecast. The market then went into a sideways range. I'm just going to fast forward all the way through, and it was the evening before we saw another signal as the market traded back through the 18,000 there, and then traded sideways to give a potential buy signal, and this coming in at 20 past 8. The 18,000 level holds, and you see the market just trading sideways to lower there, just coming back below the entry price. And at this point you have the chance, had you taken this trade, to actually exit with a break even or a small loss as the market came back. But since the market has actually moved lower, I'll just bring this in and show you where we currently are. You can see there's the signal from last night, and the market's just traded sideways and moved slightly lower. So that 18,000 is still dominating this market. And if we look at the daily chart, you can see how much this is causing a problem for the market. We've got 2 days where the market's gone through the 18,000 and failed to move higher, and today we're seeing the overnight market still below the 18,000 level there. In the news today, let's have a look. Draghi speaking at 8 a.m. and there's only the one economic news item from the US at 1:30, which is the unemployment claims. And then after that, it's down to the market to use this information to move the market as it sees fit. I expect the market to have another attempt at the 18,000 as they're desperate to get the market above this level. In the implied volatility, we've got an interesting picture here. We're back below the 10 at 96. Again, this very coiling sideways move. And another question I received was if the market does what it did with the flash crash of the 24th of August last year, will the plunge protection team come back in and rescue the market as it has done this time? The answer to that is of course they will. They will attempt to do it, but eventually they will give up and the market will actually become once again a free market with a bit of luck, but don't hold your breath. But it's going to take a huge selling consensus to do that. The other factor to take into consideration now as well, unlike many years ago when it was a free market prior to 2008 and wasn't manipulated by the central bankers, we didn't have high frequency trading either. So the Federal Reserve and anybody else that's got the supercomputer power to do it can actually move the markets in the way they want, and also cease trading. For those of you that have been following for the last few months, you will see the odd report where the exchanges have received a massive sell order only for the exchange to have a technical problem at that time. Just a coincidence, nothing to worry about. And of course, they must think all of us are stupid. Yeah, this is a very good question. They brought the market back 600 points on the 24th of August last year. Have a look at the market alert for that, which is available in the YouTube channel, and you will see I actually recorded that live. The market dropped 1,000 points, and then the plunge protection team came in, stepped in, and brought the market back. So it's not an impossibility, but eventually what you find is the market has to find its own fair value, because no government has pockets deep enough to continue the printing and enslaving future generations with the debt on the basis that they want to keep the credibility. Right, well, that's it for today. I will see you in tomorrow's. Hopefully we'll get a bit of movement off the unemployment figures, but again, the market is waiting for Yellen. I do warn you of that, so we could see sideways move, and we'll see what Draghi has to say as well this morning at 8 a.m. and how the market reacts in the pre-market session as well. Right, that's it. See you in tomorrow's. As ever, thanks for watching, and see you in the next one.